is a HELOC?
Yeah, a HELOC, that's the acronym for Home Equity Line of Credit. It's a collateral mortgage that's registered against title. You have a regular mortgage, which is the standard mortgage, and then a collateral mortgage, which is ultimately a home equity line of credit or HELOC.
So then who's HELOC for and why is it good for them?
A home equity line of credit is good for anybody who has 80% loan to value of their property. So if your mortgage is 80% or less the value of your house, I would strongly encourage anybody that's in that position to get a home equity line of credit. And the reason for that is, in all my years of working in the industry, over 70% of the people will get back into acquiring equity out of their house to finance other events down the road. Now, whether it's a vacation, whether it's an investment opportunity, maybe it's helping facilitate money into their children's education fund, maybe it's to do home renovations, but there's over 70% of the people will reacquire equity, and a home equity line of credit gives you access to that right away so that you don't have to reapply, and it'll save money in the long run.
So is that like a second mortgage then? Like that's just genuine?
No, it's not a second mortgage, it's a first mortgage actually. And again, that's a good question, because in the mortgage world, you can put a regular mortgage inside a HELOC, but you cannot put a HELOC inside a mortgage. So it's a great way to manage your money and reduce your overall cost.
All right, so then how does a HELOC work?
HELOC works when you want to access the money. So if you don't need to access any of the equity, it doesn't cost you anything. It sits on the sideline and waits. And as you pay off your mortgage, it grows. So it can get bigger over time as well. So how you would access it varies depending on the bank, but basically in most cases you can write yourself a check and the money's transferred immediately from the HELOC into your account.